Welcome back to Higher Exchanges, the number one independent cannabis investing show in the world. I'm your host, Jesse Redman from Leaf Brands, and I'm joined once again by the smartest cannabis investor I know. His name is Morgan Paxia. Morgan, what's going on, man?
I'm doing well. I'm up here in San Francisco, or as tourists would call it, San Fran, or as locals call it, SF, but doing well. It's a pretty beautiful day here in the Bay, and yeah, we're up here for a few days and be running around town here. But yeah, but good. How are you?
I'm good, man. I'm 29 days into a January reset, Morgan. I've got no alcohol, no sugar, 45-minute workout every day, half gallon of water, and 10 pages in a book. And I'm feeling good.
All right. Yeah, sugar is that's a hard one. I pretty much cut that one out years ago, and now when you taste stuff with sugar, you're like, whoa, that's sweet. But
yeah, totally. I wasn't huge on sugar, and if I did have sugar, I'd try to do like the Ollie Pops or the Unreal Treats or something that was like a little bit healthier version. And I thought I was doing pretty well. But by day 4 or 5 of day, I guess January 4th or 5th, 4 or 5 days into this, I was definitely feeling the sugar thing a little bit. The alcohol wasn't a big one for me. But yeah, the sugar pulled at me, and then the discipline of the workout every day. Like sometimes I wouldn't get home till 8 or 9 o'clock, and like you just don't want to do the workout, but you're next thing you know, you're outside running around the block or something like that. So I've never done this sort of stuff before. I've never done the dry January. I'm not like a reset guy, but it's been kind of a cool experience.
Yeah, that's good. Yeah, I zebra, but I think I kind of live a life of a zebra. Where it's, you know, the kids tell me that's what you have when you do have alcohol, that you have water, but there's not too much alcohol left anymore in our household.
Yeah, everyone's drinking less and getting healthier. So yeah, but enough about me. I'm really excited to talk to our guests today, Morgan. We have Jason and Ziad from TerrAscend joining us, and we're going to get to those guys shortly. But before that, I wanted to talk to you about FlowHub's new episode of the Great American Dispensary Tour. Morgan, they went to Maryland. I watched it earlier this week on YouTube. I had a couple of takeaways. One, the flower there looks pretty good. The food looks even better than the flower. But man, they have some backwards regulations in terms of things they have to do in those dispensaries.
Yeah, I agree. It's pretty wild how nuanced every state is, and that's kind of the cool thing about what Kyle's doing with the with this Great American Dispensary Tour. My takeaway was crab cakes and cannabis.
Yeah, right.
That's what Maryland does for you Wedding Crashers fans. But I love that quote. That stuck out to me. And I did see a bunch of comments of people saying the same thing. They thought that was really funny. But yeah, so that episode 2 dropped last week. It's a great watch. They're short. I think it's like 20 minutes. Mm-hmm. So it's definitely worth the time. But Kyle Sherman he's doing this every state. So this is the second one, and it's getting a lot of looks, which is really cool. So go check it out. But he gets to talk with various operators. He's trying to interview people on the street, asking them, what they think about it. And it's pretty amazing of either people are, how they are willing to talk about it or not. And it seems like maybe Maryland's a little bit more conservative. There was a bunch of people who are saying, oh no, I didn't know about that. But he's just doing a good job of sharing those experiences and what the emerging cannabis culture and what that lingering stigma still likes. And but it looked like, to your point, a lot of delicious crabs were consumed in the journey.
Yeah. So you guys can find that on YouTube. Just search for FlowHub or search for the Great American Dispensary Tour, and you can check that out. So thanks again to FlowHub for sponsoring today's show. So on to the main event. We have 2 of our favorite guests from TerrAscend. First, let's bring on the executive chairman, Jason Wild. Jason, how are you?
Hey, how's it going?
I'm good. And one of our favorite CEOs is here as well. He's Ziad Ghanem or Ghanem. I always screw it up, Ziad. Which one is it?
They're both good. Ziad Ghanem is good. Yes.
How are you doing?
Good, very good. Hey, congrats on a great start in January. If I force myself, I can do everything you've done. There's one that is impossible. I cannot live without Nutella. Like, how can I put sugar? Like, this to me, that's disaster.
Yeah. My daughter loves that. She thinks that's nutritious, I think.
Yes.
Yeah, hazelnuts, right?
Yeah, right, exactly. I think it's 2% hazelnuts.
Yeah, exactly.
And Ziad, last time we saw you, I think you were headed to a frat party at college. How did that work out?
Oh, good memory.
what happens in frat parties stayed at frat
Yeah.
parties.
Yeah. I think you might have
But
done didn't you do a couple funnels at that party?
that's good. It was always good to see the boys and compare the generations from one to another. A lot of things. Uh, I got a 19-year-old at college who thinks we know nothing, and then you compare
Yeah.
what they do versus what we did. It's a copy and paste, exactly the same. They're just cooler about it.
Yeah, I'm right there with you. I have a 16 and an 18-year-old, and they have everything completely figured out.
Yeah.
And I look back at myself, and I had that same, arrogance or hubris or whatever term you want to call it. And honestly, guys, the sooner you can shed that arrogance, I think the better your life gets. So,
100%.
but yeah, my kids could use a good humbling at this point.
Yeah. Yeah.
Well, guys, appreciate you joining us. I think it's an exciting time on the TerrAscend side, but I think finally, knock on wood, it's also getting to be an exciting time more broadly for the industry. It feels like momentum is building, and it also feels like no one wants to jinx it. We all know the four most dangerous words in investing are "it's different this time."
Yeah.
But let me start with you, Jason. Does it feel like it's different this time? Like, what are your feelings as we're waiting for this final rule on the rescheduling side?
I feel like we're closer than we've ever been, but you could have said that 2 years ago, I guess, as well. But it seems like we're really close. I don't want to jinx anything, and we're still we're running this business like we always have, which is under the assumption that nothing changes. But it seems like we're super close. I mean, the executive order that came out on December 18th. I mean, I never would have thought that, if you told me that 4 years ago, that Donald Trump was going to be signing that executive order, I would have been shocked. So, I think we're in a good place.
And what do you think are the biggest impacts of Schedule 3, Jason, both from an operator perspective and investor perspective?
Yeah. So, it gets us a lot closer to being able to be listed on a U.S. exchange. So I think that therefore significantly lowers the cost of capital. Companies should trade re-rate at much higher multiples. Maybe similar multiples to what the Canadian operators. I would say they should trade at higher multiples than the Canadian operators. But even if they trade at similar multiples, that would be a big re-rate. But that's sort of like that's the sizzle. And also lending costs should come down as well. Borrowing costs should come down as well. That's the sizzle, but a big part of the stake is the not building up any 280E potential 280E liabilities, but going forward, just being treated from a tax perspective like any other business that's out there. And when you do that. I know, we've all watched these stocks go down for now, 5 or 6 years, and it's made everybody sort of reevaluate everything they're invested in, and when the stocks go down every day, it doesn't help in terms of that perception. But the fact is, if we're a normal taxpayer and we're running a business that does a few $100 million in sales with over 50% gross margins and over 20% or mid-20s EBITDA margins, like those are good businesses. Like I follow the retail space as well, and the vast majority of every retailer that's a household name whose stock has worked incredibly well over the years, their profit margins are much less than our business at TerrAscend and at many of the other cannabis operators that are out there as well. So that's the tax aspect of it. That's to me the stake. That's what makes these businesses more vibrant in terms of knowing that we don't have any of that liability going forward. But the other things are that the cost of capital should go down significantly. People should be able to, it will get easier to invest in these stocks. Part of the reason that the group as a whole moves 5-10% in a day or in an hour is because the markets are just not deep enough, because we're not on a U.S. exchange. There's less participants, there's less depth to the market, and we shouldn't be surprised to see the extreme volatility. I think that will that would get better, obviously, if we had U.S. listing.
And do you have a sense, Jason, that when we get a final rule, how long it'll take after that to see some of the larger players get uplisted, especially those of you that have made some preemptive moves, whether that's GTI and Rhythm, you and Curaleaf on the TSX. Do you have any sense of what timing might look like there?
We don't, because we don't even really know the timing on the final rule, right? So like I think the plan is to go back to these exchanges once we get the final rule. And also, maybe there's something else. A few years ago when I was talking to the NASDAQ, they said they just needed some kind of signal from the White House or the administration, even if it's just one sentence in somewhere. So I think I'm not in a position to know how that could necessarily show up, but those are the steps that we sort of. I don't think that rescheduling in and of itself is enough. I think there needs to be something additional, whether it's whether it's safe banking or it's just maybe some statement from the president, or if there's a new Bondi memo or something like that sort of gives them the thumbs up, because they're just worried about their regulators, the SEC essentially.
And you mentioned cost of capital a couple of times, Jay. Said that's been one of the challenges in the industry, depending on how big you are and your credit rating. You could be paying anywhere from low teens to high teens to some of the real punitive stuff we've seen has gone even into the mid 30s when gold floor was going over a cliff. What's your sense about how much those rates come down in a Schedule 3 world?
I think they come down, they got to come down at least 200 basis points. That's just, off the top of my head. I mean, there's definitely going to be more lenders that are going to be looking to lend into the space than there would be under a Schedule 1 world. It's the main reason is, forget about from a compliance perspective or any risk from regulators. There's these lenders who are very active in the space. They're comfortable with the UTP in terms of the potential tax liability. They're comfortable with it and they'll do it. But like once that UTP stops going forward, then it's going to bring in a whole new, I would say, much larger percentage of lenders who that's what may have scared them away in the past. That's going to go away going forward.
And what's your sense, Jason, of the way investor interest evolves? And I'll frame it a little bit with what I'm hearing in my world, and also talking to some of the larger banks in the past few weeks. And they think the more head fakes we've had, the less work investors are willing to do ahead of time, right? Like we talk about cannabis turning into the ultimate show me story. Yeah. And they're saying, incrementally each time we get closer, a little bit more work gets done, but you haven't seen like a whole bunch of new analyst coverage. You haven't seen a bunch of new funds coming back into the space. Do you think when the final rule happens, will those tickets get written, or do you think that's the time where they're like, okay, cool, this is actually done. Now it makes sense to dedicate some resources to learning about this?
I think a lot of them are waiting. There's some. It's more the people we've been hearing from have been some funds that were invested in past years and they're completely gotten out, and now they're looking to get back in and they're looking to get brush back up on things. But there hasn't been too much new money, inbounds from new money. I think they're waiting because this has been the Charlie Brown situation here for the last 6 years. Nobody's been a hero trying to go in and get ahead of some piece of news. Nobody's gotten paid to get ahead of any news.
Yep. Yeah, a lot of people have lost money and gotten fired by getting ahead of news.
Yeah. And you know what? People have, the sort of like the biggest rule in investing, and I learned this like 20 years ago. My mistake is I didn't know it necessarily applied here, but one of the biggest rules of investing is don't invest in something based upon some type of legislation or federal reform. And my mistake was thinking that we didn't need this reform and that these stocks would work anyway. It's become clear that the market is super focused on that aspect of it. But I think all the people who were sitting on the sidelines, like I don't know, maybe they've realized that a little bit better than I did a few years ago.
Yeah. I think a lot of us are guilty of that. I remember I did a Spaces with Patrick from your firm, Morgan, and I asked him, I said, Patrick, if 280E never went away, do you think these are good businesses to invest in? And it was the longest pause I've ever had on a podcast. I swear it was like 12 seconds of him sitting there because he's like, fuck, I feel like I know the truth, but I don't want to say it. And then his answer eventually was selectively, which was good. But yeah, I think a few of us made that mistake, Jason. I got one more.
Yeah.
And Morgan, I want you to get ready for this one because I want to ask him about safe banking.
That's actually my voice. Pre-recorded.
Morgan has been correct about safe banking, and Jason and Ziad, he gets antsy every time that we talk about it, but I feel like it's getting a little bit more topical. And once again, guys, those 4 words, it might be different this time. So what's your perspective on 2 things, Jason? What is that realistic? And B, like, what does that add if we are to Schedule 3 world?
What does it add? I think, well, hopefully it could add listing in there. There's no reason that it shouldn't be there. So I think that that's something that it would add. The ability to take credit cards would hopefully be within safe banking as well. I mean, that I'd be curious to know what you guys think in terms of how much that can increase business. But like, I don't travel around with cash the way I did even 5 years ago. So I think we definitely lose sales to that. And it just, it should open up banking further, for everything. I mean, I have, these banks are still putting people through the ringer. Like, as of yesterday, I have investors in my fund that custody their, a pension plan at Morgan Stanley and is invested in my fund. And we went to send them distribution, and Morgan Stanley won't take the money.
Mm-hmm.
So this stuff is going on a daily basis, and continues to happen. I think that safe banking would help a lot from that perspective. In terms of my prognostication on when I think it's going to happen, I really have no idea. I think we have a better chance now because we got a Republican president who's supportive of it, right? And they've been the ones that have generally been most of the no votes. So I think we have a much better chance, but like, I've just me trying to predict what's going on in such a dysfunctional place is, whatever I say is going to be wrong, because it's been who would have thought that, like, some of these Democratic politicians who claim that they were supportive would have hurt the cause so much. Guys like Chuck Schumer and who was the guy from Ohio? Forgot his name. So anyway, it would help a lot, but your guess is as good as mine.
And Ziad, how about with you in terms of Schedule 3 safe banking? Is there anything particular in your role or when you look at the TerrAscend vision that gets you excited about these potential reform paths?
Yeah, look, I think in addition to what Jason said on the financial side, on the uplisting side, I think what rescheduling plus uplisting plus safe banking will do, it will increase the penetration into the industry. It will increase the utilization in the industry. In an N of 50, an N of 70 in my networks and my family and friends, there's a good 20-30% that say, hey, we like it better after the HHS paper. Those are the science oriented. Those are the researchers. Those are that, hey, in all 8 categories, it performed better than every other controlled substance. I don't have any problem taking a hydrocodone for sleep or Lunesta for pain or for sleep. So I think that's going to increase awareness. And then you do rescheduling, you do more research, and I think it's going to increase penetration in the market and awareness around the product. A product that we already know is safe, a product that is being used for a lot of application. Like the research is an everyday aspect, but once it gets labeled right, I think we're going to see a jump in that.
Yeah. And Ziad, thanks for pointing that out that I left out. The other thing that I left out is the ability for us to get rec over the finish line in some other states. because we've been told in Pennsylvania, or Ziad, you were told by the Republicans in Pennsylvania that, when rescheduling happens is when it's going to happen in PA, right?
Yep. And that's why we think 2026 is the year, because it's hard to still have a nay vote when the president or when the attorney general has rescheduled.
Yeah.
And this is not an assumption. This is not guessing. We heard it from the horse's mouth.
Well, that's great. I feel like it's an annual tradition every year for everyone to predict that Pennsylvania is going to pass, and it doesn't happen. But that one could be definitely different this year.
I'll take a cheesecake bet on this one. That 2026 is going to be the year in Pennsylvania.
That's too high.
That's big. You've never bet a cheesecake on that in the past.
That's right.
This is a precedent. Yeah.
At this stage in the cannabis cycle, that's a bit rich for me, Ziad, but I appreciate the offer.
Yeah. Right. Well, it's a bit rich for you with your non-sugar diet as well.
Yes, exactly. Doing sugar-free cheesecakes. Just one more for me, Morgan, then I'll pass it over to you. Jason, I know that you're a big picture thinker, both in terms of TerrAscend and the industry and your other investments. As a whole, I think that's one of your gifts is getting that big picture right. And when you look further down the road, Jason, how do you see the path to descheduling in an interstate commerce world happening? Do you have any, opinions worth sharing there in terms of, is that something that, in some area, some people in the industry now are talking like after Schedule 3, there's going to be something like a descheduling committee, and there's a realistic path to descheduling, and that might potentially open up things like interstate commerce. Do you see that as being realistic? And if so, what time frame do you assign to that?
Yeah, I assign that into the 5 to 10 year time frame. So I don't think about it. I don't think about it much. I mean, I feel like it probably eventually happens. But by that point, we'll be us and the rest of the industry will be listed on an exchange. We'll be able to take advantage of the fact that other public companies would be able to do M&A with us. If we wanted to go that route, I think that eventually interstate commerce, I'm not afraid of it. Maybe like some others are, because I think even some companies that are bigger than us are afraid of it. My thought is they have that David versus Goliath. They think that they're David, but maybe they should be thinking that in that type of scenario, they would be one of the Goliaths, and they'd be able to use that scale to their advantage. But anyway, I think that's 5 to 10 years from now.
Okay.
Yeah, and I think to prove you're right, Jason, if you think of many new drugs that hit the market, they come in as prescription initially, and then through research and through utilization, 3 to 5 years later, you see them go over the counter, and there are tens of drugs like Nexium, all the H2 antagonists, and so I think rescheduling first, safety and data that will prove what everybody knows, then that conversation will start.
Yep.
So, well, speaking of interstate commerce, we were trying to fight or trying to appeal to the Supreme Court on an intra-state basis with the Canada Provisions case, and late last year that we did not get what we wanted to see. But just to clear the air, Jason, can you tell us what did happen there, and I guess where do we go from here with that whole thing?
Yeah, I guess we were certainly hoping for a better result than just being rejected. We were hoping they were at least going to ask the DOJ to file their response, which they hadn't, and we thought that would be a positive. And we were told that only one justice needs to request that. So we thought that there was a decent chance that would occur. That being said, we got rejected, and the thing I didn't realize is if we got rejected, we were not going to get any reason whatsoever for why we were rejected. It's just stamped rejected essentially. So that was a disappointment. We've talked about it internally, me and Ziad and Lynn, our chief legal, and the way we look at it, we definitely would have done it again. We spent a reasonable amount of money. We were able to build a good coalition to help fund this thing and get a deal where essentially the Boy Schiller was subsidizing it to a certain extent. Our view for the last 3 years, maybe after the last safe banking rug pull in December of a few years ago, I came to the realization that we needed as many shots on goal as possible. This was one of our shots on goal. Didn't get a direct hit, but the funny thing is, earlier today I was talking to a constitutional law professor who knows a lot about our case and the Supreme Court and all of that, and he thinks that we could refile these cases once rescheduling happens. That we could refile these cases, and that a lot of the arguments that the government made, in response to our original complaints, would not apply anymore. Like, they talked a lot about the dangerousness of the drug and how it was still a danger to society and all that. I mean, Schedule 3, there's so many facts about that are not congruent with a lot of those statements. So that gave me a little extra hope in the last 24 hours. But overall, I just feel like we gave it a good fight. We were able to get a bunch of companies to get united around something, which was which had been hard to in the past. We had a chance all the way up there until a few weeks ago. And I think we still, according to this professor's view, we have a much better chance of at least getting heard if it's Schedule 3 versus Schedule 1. So maybe we were even a little too early, but we can sort of put it all back together again and give it another shot.
Yeah, and to that point, I mean, maybe with more capital groups and external groups wanting to be more involved in this space, they might also want to be a part of helping this. I mean, I know we had a pretty strong front from like an amicus brief perspective, and a lot of groups that did see value in getting this done, and so that could also be bolstered alongside that. I think I totally agree with. It's kind of like a flooding the zone kind of mentality. Like, we got to take all the shots we possibly can and keep pushing, because even with rescheduling, like, that's just a step, and it's a monumental step, because it's finally moving off of this ridiculous Schedule 1 position. But there's still work to be done. Like you said, like, we don't have banking reform. This is not fully legalized. It's still an illegal substance, and still work to be done. And so that's great to hear that there is a case to proceed forward there. Because I was wondering too, is like, what do we do from here? Is it worth continuing the battle and understanding that, there's actually a valid reason to do so? It's good. It's very good to hear. And what would you say, just going through that? I mean, I was tangentially involved. Emily was really the point person here at Poseidon, involved with you all with that. But what would you say were like some of the big learnings from going through that process?
Oh, just learning the Commerce Clause and a million different opinions that everybody has over the Commerce Clause. I learned that there's some good people in this industry. This industry often gets knocked for not having the best individuals, affiliated with it often, or just how they're not ready for a lot of the time. People aren't ready for prime time. But in terms of the other partners that we had from the different operators, big and small, that were funding this or were part of the case. I mean, everybody worked really well together, and I don't know, sort of. I felt like we had a better chance. I mean, I don't know what our chance was. David Boyes thought it was over a 50% chance that they'd agree to hear this. I think I'm also thankful that. Maybe we didn't need it as much because we have rescheduling coming around the corner. So it was one of our shots on goal. You never know which one is going to be one of the ones. And I'm not in any way saying that this case applied pressure to the White House, but I do know that the White House was aware of our case. So maybe I don't know. Maybe in the back of my mind, I'd like to believe that it did help. Part of the thing that David Boyes originally pitched us on was whether we make it to the Supreme Court or not. this should help apply pressure. He was thinking more in terms of Congress, where it doesn't seem to, have helped. It didn't seem to have helped there a lot, but just the secondary benefit of applying pressure to the other branches of government to do something. And I'm not saying Trump, he would have, I'm sure he would have done this anyway, but I do know that they knew about it.
Yeah. Yeah. I mean, from my perspective, this whole experience working in cannabis, learned more about politics than I've ever cared to know. And this was also an opportunity to learn more about our judicial process, right? I mean, it's pretty cool to be, sitting courtside with this kind of, these different elements that we have to, work through as an industry and, as operators and investors. But obviously we would have loved to have made that through already, but to your point, we got the executive order, and it was really interesting. I'm a big Bill Maher fan, and he said it on the show last week of like, to him, this is already done. Like, oh, it's already been rescheduled, and I know that's actually becoming a common perception amongst people is, Trump signed the executive order, it's already rescheduled. And it's like, no, time out. We still got to get it done.
Yeah.
So.
And I think that's part of also, I've gotten a lot of questions about just why the sector, why is it sold off so hard since December 18th? And I think it's a combination of, it's almost always buy the rumor, sell the news. The stocks had, gone vertical for a week or so before that. But the other thing is, I think that a big percentage of investors really did think that Trump was signing, that rescheduling was going to happen upon him signing it, and it was just going to be done. That, if people, I don't believe this, the market believes right now that it's a done deal, because you can still see how much the index has moved every day when we hear a whiff of, a government shutdown or something else. And I think those are the two reasons that the sector has acted so poorly. Is a good chunk of people thought that rescheduling was going to be done, even though, I think there's a much higher chance than ever that it's happening in the near term. That's different than it being done.
Right. Well, I mean, to your point is like, it's like, how much is it actually investors or traders, or how much is it algos? Because like, to your point, like yesterday, news hits, Matt Gaetz says ASAP, all of a sudden, boom, everything, takes a step up. And then today, Marijuana Moment posts that the DOJ says no comment, no progress, and boom, markets just immediately trade like in unison, just step down. And, are people really sitting at their computers ready to go at those moments those press releases are hitting? I can't help but think that there's just a lot of other stuff happening. And then the retail and others are just trying to react after it's already happened. So,
I think so. And that's why, we, at least in my discussions with Ziad, we don't spend a lot of time speculating on it too much. I get more excited about the operational stuff, like those big snowstorms in the Northeast last week were great for business. It was almost like whiffs of COVID back when everybody was stuck in their house for several months. Not quite the same, and we'll see how much of that was pantry stocking. But it's good that I get to keep my feet on both sides. I get to look at it as an investor, but then I get to talk to Ziad and hear about the things we're doing at the business, and that often makes me feel better.
I keep looking over and over at this quote. You guys probably know who Mark Yusko is.
I'm sorry?
Do you know Mark Yusko? The name Mark Yusko, he ran the UNC endowment. He was at Notre Dame before that, and now he, I think, I can't remember the name of his firm right now. But okay. I respect Mark a lot as an investor, and I have this tweet that I took a screenshot of, and it says, "Always remember that the price at which two investors choose to exchange a small amount of an asset is not the value of the asset. Price is a liar." And I think that applies over and over in cannabis. Like sometimes our Leaf shares can be down, 8% on $20,000 in dollar volume, and people are, sending me DMs asking what's wrong with the company, and I'm like, nothing's wrong with the company. Some guy with a little position in his portfolio decided to puke it, and that's all that. Nothing has changed. And you probably just see a different version of that, at TerrAscend, where it's a little bit more scale, but still, I'm guessing the stock gets pushed around all the time for no reason.
Yeah, well, because it goes back to there's no depth to the market, so a small amount of shares can have a huge influence on the overall market cap. And it's I agree with that statement from Mark Yusko, but over time, the stock price always tells the truth. It's the only thing that's like the only thing that's the truth. But these short term, like just the moves these stocks, Ziad, if you remember, I was telling you months ago, like I think we were discussing our buyback, and part of the reason we did it is that you would think that as a stock gets much lower, that that it would go down, have the ability to go down less on a percentage basis, but the moves actually become much bigger from a percentage perspective. And yeah, I mean, I think our stock was down. I don't know, it was down 15% or 10% this morning. I didn't, I didn't feel 10% worse about the business, and that's just that's just what happens when you have stocks that are on the cheaper side. Fortunately, we have our buyback in place. We would have been able to use it. This morning would have been a great time to use it, but we're blacked out until we report earnings.
How big is that program, Jason?
Ziad, what's the amount on it?
10 million.
10 million, right? We upped it. We used some of it the prior year, and then we re-upped it to 10 million.
Oh, cool.
Yeah.
Morgan, I'm just going to ask quick about some M&A stuff. Then I want to make sure we save some time for the TerrAscend fundamentals. But Morgan and I talk all the time offline about how things are feeling in the industry. And since the middle of December, when we got the executive order, I've noticed in my universe a lot more conversations are opening up, and some of those conversations are around financing. Groups that we had spoken to months ago that are proactively reaching out now and showing a lot more interest. So it feels like even without a final rule, there's some people dipping their toes back into lending to cannabis companies that weren't there before, or had paused putting out money. And then the other thing that I've noticed is more conversations about M&A. I'm not totally sure why that is, but shortly after Schedule 3, we saw a few deals get done. I think the biggest was that Wild and Gruen deal, which I thought was really interesting. So just curious, Jason and Ziad, if you're seeing that in your world, both in terms of the purse strings loosening up and people a little bit more interested in lending money for growth, and then two is some of those consolidation or M&A type conversations.
Z, you want to take it?
Sure, yeah, I'll start. Look, from a refinancing perspective, we have refinanced all the way till 2028. We have a great partner in Focus
Late
Growth.
28.
2028.
And I said late 28.
Yeah, yes. And we have a partner in Focus Growth that have done an outstanding job with us, both on supporting our M&A efforts, but also doing this early before we heard any of the news. We have been approached by some funds, and we are seeing more interest from banks asking to learn more about the industry and asking about rescheduling, similar to the questions we led this call this morning or earlier today. What does that mean? What are the changes? What does that do to 280E taxes? So we're seeing this. At the same time, we're seeing some banks who are interested in mortgage lending, right? We own all our assets. We don't have any sale leaseback. We have north of 100 million in properties that we own. We have a deal with Focus Growth that if we find somebody who can do a mortgage lend, we can do up to $100 million towards with lower interest. They take second lien, give the first lien to the. So that's something we continue to explore, and I think it will come to fruition at some point. But they know that rescheduling has not happened. I think they're warming up in the bullpen until that takes place. On the M&A front, Jason, anything you want to add on the banking side or on the lending side?
You covered it.
On the M&A side, look, Jason and I talked about this 3-4 years ago, and I still firmly believe in it. Lots of learning took place the first 3, 4, 5, 6 years in the industry. Lots of mistake have taken place. A lot of sale leaseback and beginning of ends have taken place. At the end of the day, I think there's going to be few companies, 5, 6, 7, 8 companies that are going to consolidate and really lead this industry. And those companies are companies who have strong balance sheets, companies who are flowing positively on cash flow from operation and free cash flow, companies who have the ability to refinance, and companies who have good sponsorships, like the sponsorship that we have. And I think we're seeing interest from small operators and even single state operators, and in some cases MSOs that are under a lot of distress for any of the reasons that I described, to see how can they find a home in a better place. For example, when Union Chill get approved for us in New Jersey, we had an inflow of calls from operators that have similar operation to Union Chill, asking about, hey, would you be interested in us? Here's what we have to offer. Here's how protected we are. So yes, we are hearing more and more about this. We've been involved in bigger conversations, but the one thing that we have never deviated on, and one thing that we will stay the course on, is we will never pay for something more than what we need to. And that's something we've done it, and we waited for the right time in Maryland, and it's paying its dividends today. And that's what's allowing our operation, the machine, to be operating the way it's operating, with 50 to 52% in gross margin and a constant mid-20s in EBITDA, amongst the best in the industry, especially if you take our size into consideration. So yes, on the interest on the banking side, yes on M&A, and when we marry our discipline and the interest we're seeing in consolidation, plus the organic growth levers that we have in Pennsylvania in 2026, that's what makes me more excited about where we stand today versus any time over the last few years.
Yeah, Ziad covered that well. The other thing that just sort of popped into my head, and I hadn't thought about it, but like, a lot of companies have been asked about taking the company private. We haven't gotten too many questions, but I'm talking about the overall industry, and the reason that I've always said that I don't think that happens is you need to take on a lot of debt to buy out the existing shareholders. I think that once 280E goes away, if these stocks don't re-rate, then that can become a possibility for some of these companies, because there's going to be a lot of lenders that are a lot more free with capital to help go effectuate something like that, if they're not handicapping you for the 280E or for the UTP.
And just one follow-up, Morgan, then I'll throw it back to you for the fundamentals. Has Ohio been an example of you guys needing to be patient in terms of expanding that footprint?
Yeah, for sure. I mean, we originally, and we sort of, what do they say? A crow? That's what? Ziad, why I'm asking you? You always get these things confused anyway. But we ate crow a little bit. We had made it very clear, and internally we were very clear that we wanted to make a meaningful acquisition there before rec started. We didn't hit that deadline, and we ended up so far we made one acquisition there of a good store, but we didn't do the sort of bigger global thing of buying one of the licensees that had multiple stores and a grow. I think we are very happy that we did not do that, because the market, and the reason that we backed away was that the market, we were going and meeting with, we went on this whirlwind 2 or 3 day tour through Ohio, and everybody was laying out the math of all this new capacity they were bringing online, and seeing all this equipment in the parking lot. And me and Ziad were looking through the math and realizing that the market was going to be oversupplied like within months. And that's really what made us back away there. The crazy thing is, we had checked in with one of the ones that we were spending a lot of time with. We checked in with them like 8 months later, and their wholesale business was up 0% versus before rec started, which is like pretty unheard of. So we're definitely glad that that we waited it out. We're still looking in Ohio, and we think we're going to be able to get over time to the 8 dispensary cap. And as we have a bigger footprint there, then we'll look to get something hopefully on the cultivation side, mainly to be more vertical, not necessarily that we think there'd be such a huge wholesale opportunity. But yeah, it's worked out. It's worked out well. We've gotten one strong asset, and we were really I think we were very disciplined from what we were willing to pay perspective. Ziad, anything you'd add?
No, I think you covered it well. I just want to comment on some of the chat questions here at DM Dizzle. We love your support and thanks for sticking with us. We love what we build, and we're as far as when do we expect positive EPS, as soon as rescheduling happen and the UTP is out of the calculation, we're looking at neutral to positive EPS. This is our goal. This is our true north. We don't only look at the free cash flow, but we're looking on how we deliver back the value for the shareholders. UTP today still flow in the net income, and that will be taken away. And if we don't get to ADE, TerrAscend will likely be acquired. The answer is we have never had any conversation except being the acquirer. We are constantly having conversation with independent SSOs and MSOs on how we can help them because of our balance sheet. So when I say I love what we built, and when I say I think we're set up for success in the new environment more than anybody else, I really, really mean it.
And shout out to our friend Mike Redeker with this question here. Mike is a big supporter of you guys online and in real life. So shout out, Mike. Hope you're doing well. I think you guys already commented on PA that you're optimistic about that flipping with rescheduling this year.
Yeah.
We're optimistic, and we're looking at some acquisition targets there as well. We just had one slip out of our hands that would have been a large deal. But
this is when you stop.
Yeah. But anyway, we're looking at multiple other things in PA as well.
I never know what I can say, Ziad, either. It's like, Jesus Christ, you just want to talk about stuff.
I didn't give any names or anything like that.
Yeah, you're good. You want to take us home with the fundamentals conversation, Morgan?
Sure. So, Jason, you were just mentioning about, what was going on in Ohio, and, just looking at 25 overall, I'd say for the market, it was largely, I'd call it flat for most of the top operators of public companies. And it's, I've heard the terms of the treadmill or the melting ice cube, or, which is really just because of this dynamic of the price compression, right? Yep. And as you mentioned, in Ohio, and, I've seen this in every other state without fail, too much capacity brings price down. And, and I was just kind of curious where you guys see the kind of the pricing cycle so that we can, get off this treadmill. And, do you think there's still more to go? And I know every state is different, so understand that nuance. But I mean, just as an aggregate,
yep.
Is there still more to go here? Or do we start to see the unit growth overcome the rate of change on price compression? And is there a positive rate of change starting to happen, or where do you see things in that?
See?
Yeah, I'll take this one. Look, the way I look at the states, I look at them at 3 phases. The phase of the Colorado and California and Michigan, and this is when the prices started at $7,000, $8,000 a pound at retail and got all the way to the low that we saw today. And what drove that was, the equation is the growth of the state versus how much is coming online from a cultivation perspective versus retail store and utilization. And anytime you have a lot of cultivation that is coming in, but the market is not growing, the melting iceberg or ice cube that you said you saw, and that's what caused this. The second set of states, those are the middle states, right? So those are where we saw still cultivation come in. There were capital, they were still available. Sale leaseback were still happening. And you saw that degradation in pricing much slower. And now you're seeing the newer state that are coming in. There's more responsibilities. There's more knowledge from operators. In Maryland, as good as Maryland for us, I will never build more capacity than utilization. I started with 4 rooms, then 8 rooms, then 12 rooms, then I wait. So I manage my wholesale and my I manage our wholesale and our retail verticalization in a thoughtful way to be around that 60-70%, so you do not put the pressure on the pricing. So I think we have evolved, and look, we've shared it before, and I'll share it again. In New Jersey, even with the price going from $8,000 a pound in retail to $4,000 pound in retail, we're still seeing gross margin in a number that starts with a 6. And the way to stabilize that gross margin in the 60s is to have quality flower and yield and automation, that during that period of melting iceberg, you are making up for it from a productivity and from a yield perspective. And that's what has been successful. So I think strong operators are better doing this. The responsibility from what's coming online and the money that's available for grow is less, and that's where we're seeing the stability. So I say that's on the back side of the house. On the front side of the house, if rescheduling happen, the industry opens up more. My wife's friends who are holding, excited, know the benefits, educated, but saying, I want to see rescheduling to come in. I think we're going to see that jump. With that jump, you'll see the unit increase and you'll see the economy improve of the industry. So I think it's those steps in my mind.
Oh, that's really interesting. I didn't think about that, where people are still anxious, stigma around coming into a store until it actually is rescheduled. That's really interesting, because that could, and I know we can't talk about Q4 yet because you haven't announced it. So just looking from like Q3 is kind of nailing right, as you mentioned, is revenue was largely flat, but improving on the back end, as you're saying, improving efficiency and just trying to squeeze every bit of juice out of it while we are waiting for some of these things to clear through the cycle. But we'll
and trying to find more deals to
trying
to find more fuel, or so to speak, to put into the machine.
Yeah. And as Jesse was mentioning before, we're seeing more activity, like actual activity, not just like kicking tires, than I've seen in years, which is just such a welcome thing. And it seems like a lot of that has been driven by the private side is finally being more realistic. Yeah. Where before, like you guys were like, this is where you guys should be from a exit price, and they were still like 2-3 turns above that, and it was just like impossible to get deals done, and it took forever, and it was deals just. But I'm assuming you guys are starting to see the private side is getting better as far as being like, okay, this is where the exit value is, and let's just get things done. Is that fair to say, or do you think that spread is still a challenge?
Well, it's always a challenge. That's why that's why we're not announcing, a deal every 2 weeks or something like that. I mean, and it's challenging dealing with all these mom and pops, just lots of personalities and things like that. But there's definitely more realism than there's ever been from a valuation perspective. And the fact that all these states, it's clear now that they don't all just grow to the sky. A lot of these smaller operators realize that they're going to need to take advantage or be part of something that has more scale and can combat that price compression over time.
Yeah, 100% agree with that. I mean, that's what we talk about with our companies all the time. Is it's like consolidation is happening. Like, we need the scale, you need the operating leverage. You got to be part of either you're going to build something big, or we got to join something big. But the days of kind of just trying to stay in between there is just, it's not. You're just you're opening yourself up to too much risk to be, basically outcompeted. But
and we also point out to all the potential sellers like that in this sector for the last 6 or 7 or 8 years, the people who have made the most money have been the sellers by far,
especially women. The women CEOs have been the best at getting these. Yeah. So kudos to all the ladies out there for hitting that bid.
Nobody's had FOMO for selling, and then I haven't come across one of these assets where somebody sold and sort of moved on where they weren't, they wish they had stayed in. I mean, that sort of just speaks to how tough the sector's been for the last 5 or 6 years, more from a public stock perspective. And maybe that means I hope that means that there's a lot of upside here at this point going forward. But we certainly point out to the sellers that, sell to us, you'll make a big chunk of whatever cash flow you would have made if you had to sit and operate this thing. And as they know, it's a hard business, and over time, it's they understand it's going to get harder.
Yeah. So, and also last year, you guys were active not only with pursuing acquisitions and working on the business, but also kind of reshaping what TerrAscend looks like. You successfully exited out of Michigan, and just kind of curious how you're looking at the business today. Is there more kind of repositioning and densifying in other areas? Are there other markets that you're, less interested in? Just kind of curious, because I mean, like, obviously we've seen a lot of activity in some of these legacy markets, like in Colorado, which, some surprise there. And I'm hearing a lot here in California, there's consolidation going on. But just kind of curious how you're looking at it today with, some of the moves that you guys did last year.
Sure.
So you want to start that?
Yeah, I'll start on this one. Look, we exited Michigan because Michigan was dragging the business. Now, the remaining of our states, Pennsylvania, Maryland, New Jersey, Ohio, and California, independently, each state and combined together, are profitable and are putting us at that 50 to 52% gross margin, mid-20 EBITDA. The focus here is to go deeper in some of the states that we are in. New Jersey is a big focus for us. We announced one recently, and then we're in negotiation with others. Pennsylvania, we would not hesitate to go deeper. We only have 6 states. We have our biggest cultivation facility there, as big as all our facilities combined together, ready to go with no capex needed for adult use. Maryland, we have a huge capacity that we're growing in a smart way as the market progresses and as we continue to climb the market share ladder. New states, we have few states, and of course, Ohio is, we have 1 store, and then our focus is still the same, to grow up to the limit and start with retail and then evaluate the cultivation. So we size the business with what we like, that work very well together, and then going deeper in those states is a focus, but then adding states when it makes sense. We like Florida. We continue to have conversation in Florida. We have conversation with other operators that are in multiple states. The one thing we promise is we will not add any business or any state that will drag our business down. So that's the focus for 2026. I say, forget for a second about cannabis. Forget for a second about Ziad, Jason, the name of the company. We'll just put one condition. That condition is if you believe in the cannabis story, with rescheduling happening, uplisting happening, and safe banking happening, which we're closer than ever. If you believe in this, and if you're an investor, say there's a company that is sitting at 50 to 52% gross margin, and they show you they can do it every quarter, they'll continue to do it. They are sitting at a mid-20% EBITDA. They have a consecutive 13.5 quarter of free cash flow and cash flow from operation. They're refinanced all the way till 2028. And they have growth lever both organically with PA, going adult use, and then acquisition that is accretive every time that you do it, because where you trade today. I would say this is the perfect place to invest, and that's why I'm personally that excited about our company. We check all those boxes, and we really feel that we build the machine above the EBITDA line, and now below the EBITDA line, the UTP disappears or the 280E disappears, and this is where earning per share become positive, and we start building that momentum on the debt line, reducing debt, paying down debt, etc.
Sounds good. My wife and daughter just walked in, and my wife heard Ziad giving the whole pitch. She said she's
Hi, Tammy.
she's all in. She wants to double down.
Remember that?
We had an investor named Steve online who wanted us to ask why buy TerrAscend now. I think you just covered that, Ziad. That was awesome.
I mean, honestly, I say it with conviction. I say it with proof. I say it with evidence. And the stock price sucks. I hear it from Jason. Jason is our biggest supporter, our biggest sponsor. He tells me, if you told me 4 years ago, 5 years ago, you said it 3 calls ago, Jason. If you told me the price that
where the business would be, the size of the business and the profitability and the cash flow, and where the stock would be, I would be shocked, and then I'd be pretty pissed or unhappy.
Yeah.
So but we lived through that. I think there's certainly a whole lot more upside versus downside at this point. And we're just going to go out and continue to go out and get it. And while we're in this environment, it's not so bad for us because we can go continue to find accretive deals, and because our footprint is so much smaller than all the other companies that have similar margins to us. We have the ability to go and fuel this thing up and really drive best in class margins.
So I know we're running out of time here, so just one last quick question. As Ziad, you were talking about the balance sheet and how you guys think about it, and talking about already taking care of the debt out to late 2028. But as capital markets do change, as we suspect they will upon rescheduling going effective, more participants coming in, hopefully pushing cost of capital down. What would you think are your primary capital allocation decisions when that does happen? Is it more, or I'll just leave it there. What's how do you guys think about it?
Yeah, I would say M&A, accretive deals is one of the the levers that we're focused on from a growth perspective. We believe there are some good businesses that could be very complementary to ours, and really create that wheel of cash flow that will allow us to put back in the business from a growth and capex perspective. So I would say M&A is one. Growth capex, expanding some of New Jersey, for example, we can get up to 10 stores and really get a good hold of the market. In 2026, I'm investing around $3.5 million in our growing there in order to support that capacity and verticality and support the gross margin. I would say those are two of the leading bucket, and then there's the debt bucket, right? That if you invest in the first two, then you have more free cash flow. Then you can serve the debt and reduce the interest, because that's the line that needs eventually the focus as business grow. Jason?
Yeah. And we're going to, and hopefully lower our cost of capital significantly through something opportunistic, post rescheduling. Once we think the market's, sort of more reflecting what we see, we'd certainly be open to, we have the ability to pay down our debt. I think Ziad mentioned it, A, through mortgages, but B, through more favorable debt or some equity at a much higher price. Yep, that's the plan. At this point, like I said before, I just think business itself is pretty good. So it's like the stock price over the last several months, or even the last few days, we don't feel is reflective of that.
Yeah, I think that's well said. Well, Jason and Ziad, I really appreciate you guys taking the time. I always enjoy the conversations. I know you're really busy, so appreciate you being here today.
Awesome. Thanks for having us.
And thank you again to FlowHub for making today's show possible. This is the retail platform trusted by the best dispensaries in the country. If you haven't evaluated your tech stack in years, there's a good chance you're leaving money and efficiency on the table. If you are a serious operator, see what's possible at flowhub.com. So thank you all for listening. We're going to see you again in 2 weeks, so look forward to that. If you're listening on YouTube, or if you haven't been to YouTube, we're working hard to build that subscriber base. It's doubled over the last couple of months here. So we appreciate that. And if you are on YouTube, please go ahead and hit that subscribe button, leave a comment, leave a like, all that stuff feeds the algorithm and helps us reach more cannabis investors. And I think the more cannabis investors, the better. So we appreciate the support there. Morgan, always good to talk to you, my friend. I'll see you back here in a couple of weeks.
You got it.
Alrighty. The views expressed in this podcast are provided for informational purposes only. Nothing we said should be considered research or recommendation. All investing involves risk, including the loss of principal.